inflationary.
Yes.
You're just flooding the system with more worthless fiat money. Stablecoin is shit. It's just worthless shit, just like a dollar. Doesn't so by adding more shit to shit, it doesn't turn it into shinola. You don't bake an apple pie if all the ingredients are shit. It's still shit. You have a pie of shit.
Do you think
I mean, look at what's happening in Tether. They buy all the interest that they generate by loading up on treasury bills. They buy Bitcoin. At some point, the Bitcoin position will exceed the dollar position, and then the Tether will be backed by Bitcoin, not dollars. And so then you're trading in Bitcoin, not dollars. So the dollar that you're in Africa and you're saying, I'll give you $10, it'll
Yeah.
actually be Bitcoin. It won't be dollars. But you say the term dollars anyway because
Yeah.
it's a legacy term.
Hey guys, welcome to Everyday Finance. Keiser's audacious statements on the future of Bitcoin come at a time when the cryptocurrency sector is responding to some turmoil. In the aftermath of a substantial futures expiry of $390 million, Bitcoin experienced a decline below $115,000, resulting in the loss of 14% of open interest and causing anxiety. Despite this, the market is in a remarkably state of calm. It is clear that traders are not panicking or becoming unduly negative because the annualized futures premium is now sitting at 7%, which is comfortably within the neutral zone. In spite of a decline of $5,000 from recent highs, there is no indication that the market is giving in. Although the skew of the options market experienced a brief surge, it immediately returned to normal, indicating that expectations were balanced. The retail market in China does not exhibit any signs of migration, despite the fact that there is a slight discount on Tether. In a nutshell, Bitcoin may be shaky, but it is not an indication that it is about to crash.
You know, there's 5 levels of Bitcoin awareness. There's number 1 is, I just found out about Bitcoin. Here's how you fix it. Number 2 is, I love Bitcoin, buy my shitcoin. Number 3 is, Bitcoin is primarily a medium of exchange. Number 4 is, Bitcoin is primarily a store of value. Number 5 is hyper Bitcoinization.
Mm-hmm.
And just about everybody has to go through those 5 stages of awareness of Bitcoin. So when Trump is on level 2, I love Bitcoin, buy my shitcoin, right? Because he has his Trump coin, his meme coins, and all these other things. So he's only not even halfway through his Bitcoin education. He doesn't really understand Bitcoin profoundly or significantly. So he's going to make a lot of rookie mistakes. A lot of people get burnt out on meme coins and shit coins and altcoins, except in this case, he's going to destroy a country, his country, the United States. Sure, and they're not getting the traction they should. Where's the Bitcoin strategic reserve? Where's that? It's not happening. Where's the audit of the Fort Knox? It hasn't happened. The U.S. says they have 200,000 Bitcoin. That's false. The 100,000 is owned by Bitfinex. So they don't have jack shit. I mean, we're going into a world where the U.S. is kind of bluff with a pair of 2s. Meanwhile, El Salvador has a couple of aces. We have a very high Bitcoin to capita ratio of over $100. So it's in the top 3 with Bhutan is highest. And Kazakhstan or some other country has a very high Bitcoin per capita as well. Then there's El Salvador. So those are the 3 countries that are leading the world in the Bitcoin revolution. The U.S. is nowhere in the top 10. It's lagging. There's a global hash war going on, and the U.S. is losing. What they just the Genius Act and the Stablecoin Act just got blown out of Congress. They just delayed them. They didn't get through. They're being stalled because they know it kills the dollar. I think a few Republicans understand that the dollar and the Bitcoin cannot coexist. So they are beginning to realize this and are starting to hit the brakes in terms of getting some of this stuff passed. So let me get this straight. So you're afraid of inflation, the uncontrolled money printing by the government to print dollars out of control and kill everyone's purchasing power. So to cure that, you're going to allow private companies to also create money out of thin air and double up on what the government's doing.
It's free banking.
It's inflationary.
Yes.
You're just flooding the system with more worthless fiat money. Stablecoin is shit. It's just worthless shit, just like a dollar. So by adding more shit to shit, it doesn't turn it into shinola. You don't bake an apple pie if all the ingredients are shit. It's still shit. You have a pie of shit. If you go into your car, in the front of your car, you see the dashboard, right? Why do they call it a dashboard? Because back in the horse and buggy day, the horses' hooves would kick up mud and hit you in the face. So they put up a dashboard. But now, is there a horse in front of your car? No, it's an engine. But we still say dashboard. Same thing with the dollar. People will say the dollar, but it won't exist anymore. It's just it's an appendage term that will exist in the future that refers to nothing. It doesn't refer to anything in reality. It's just something, it's a term people use, the dollar, but there won't be anything other than a unit of essentially Bitcoin.
Do you think
I mean, look at what's happening in Tether. They buy all the interest that they generate by loading up on treasury bills. They buy Bitcoin. At some point, the Bitcoin position will exceed the dollar position, and then the Tether will be backed by Bitcoin, not dollars. And so then you're trading in Bitcoin, not dollars. So the dollar that you're in Africa and you're saying, I'll give you $10, it'll actually be Bitcoin. It won't be dollars. But you say the term dollars anyway because it's a legacy term.
Ethereum has regained its prominence with a price increase of 50% in just 2 weeks, which has fueled new levels of positive talk. Currently priced at approximately $3,750. It is still below its top, but momentum is rapidly building up. With a projected price objective of $9,000 by the beginning of 2026, the Elliott wave theory implies that Ethereum is currently in the midst of a significant third wave. This is not merely a hypothesis. The facts on the blockchain supports it. Over 28% of all Ether is currently staked, and exchange reserves have fallen to levels seen in 2016, which has reduced the possibility of selling pressure. In the meantime, institutional interest is mounting, seen by the fact that Ethereum ETF inflows have surpassed the $4 billion level. Strong fundamentals and genuine demand are the driving forces behind this rally, which is not simply another rally.
5 years from now.
5 years from now.
Definitely. But look at the rate at which Bitcoin is soon to become a $200 trillion asset. It's like the internet in 1999. It has similar uses of Bitcoin today. So if you look at the internet graph in the 1999 period to 2000, 2001, you went from 300 or 400 million users to 3 billion. So Bitcoin's about to go from 250 million users to 3 billion. So it becomes ubiquitous. Obviously, it puts it at a much higher price, right? I mean, the thing to keep in mind is that there will come a day when no one will accept your dollars for Bitcoin. If you come up with a bag with $10 million, people won't give you one Satoshi for it because it's worthless garbage. You're just like, why did you bring a bag full of garbage to me? I'm not going to give you my Bitcoin for that. So fiat money will have no purchasing power at all. Like in the US we had during the Civil War, the Continental, I believe it was called, was a currency that the exchange value dropped to zero. But most fiat money goes to zero. Every single fiat money in the world has eventually lost 99 to 100% of the purchasing power. None have survived. The average lifespan is something like 27 years. We've had hundreds of fiat money. None of them have survived. 99 to 100% loss of purchasing power, including the dollar and the British pound. And same thing with the US dollar. It's losing purchasing power every day, and it's going to lose another 90, 95, 98% of its purchasing power, right? Because they have no customers, because the Bitcoiners are going to walk away. They'll just be, they won't be using those central banks. They'll have they'll have several 100 million Bitcoiners with a lot of Bitcoin compared to what you can buy purchasing power wise with any kind of fiat money. And if you have no customers, you have to close up shop. The IMF will have no customers. Nobody will be borrowing money from the IMF anymore because they don't want to borrow fiat money. They don't want special drawing rights. So therefore, if you have no customers, you have to shut the store. They will fight it. And their primary weapon is to print more money, which makes me richer. So I say, fight all you want. Fight more. I mean, I could help you. And again, my role is Bitcoin, the bishop of Bitcoin. I could bless you and help you get over your fiat money addiction. But I'm conflicted though, because I'm still like a capitalist. I'm still a Wall Street guy. I'm still like, I could help you, but if I do, maybe not, because the more you borrow money to fight each other, the more richer I get. And I know you, and there's less competition because you're about to take yourself out of the game. So it's like alcoholics. If you see someone who's an alcoholic, if they're not ready to recover, it's sometimes dangerous to try to help them because they're still in denial, they're still in their disease. So that disease, you can get caught up in their mess. So the only way to help somebody recover from alcoholism is you have to wait for them to bottom out. But sometimes
Hmm.
they don't ever bottom out. They end up in an institution, a hospital, or dead. And so all of these countries are heading down the same path. They won't be around. Well, that those countries reinvent themselves in the Bitcoin world, and they become decentralized, as I was been saying, so that the citizens own the wealth because they're the node runners and node nation, and the central bank and the government are just the service provider. They would subscribe to El Salvador. I want to go to El Salvador. So like Netflix. I subscribe to El Salvador. I pay $1,000 a year to subscribe to El Salvador. I'm here with the roads. I got the beaches. The president's cool, but I have all the wealth. The country has no wealth. They're just providing a service. It's a service provider. Well, I mean, how it organized, yeah, you say it's a network state. I mean, yeah, you could say that. But you're referring to my murmurations and starlings
Yeah,
and things.
yeah. I'm
So,
trying to get like,
right. So that's like a network. It's an invisible network. It's a network. And these networks they form and they disintegrate. It's like, in Hollywood, when they make a movie, like 5,000 people come together for 3 months. They make a movie and then they split. All the technicians and all the above the line, below the line, everyone who's involved in that process. If you look at the credits on a Hollywood movie, they run and run and run. There's thousands of people who make this film, and they all run unemployed before the film, and they're unemployed after the film. But they come together during the film. They make the film. And then they move on to another film. Stay agile. Get a few passports. Self custody your Bitcoin, and just stay agile. Get your bug out bag ready by the front door, and be prepared to move quickly in case
you need
the
to.
storm washes up at your door. Certainly in Europe, it's incredibly distressed, and in the UK, it's unbelievably distressed. I mean, they're in serious denial about the state of affairs in the UK. The economy is in free fall, and there's no leadership at all, and things are really falling apart in the UK. And Europe is looking pretty bad. And there are places where things are on the upswing. A lot of people talk about the fourth turning, right?
Hmm.
The fourth turning. This book came out. It's this idea that you have these 20-year cycles of good times, less than good times, bad times, this type of cycle. And we had a fourth turning that resulted in the World War II. There was a fourth turning in, I think, World War I. I'm a little sketchy on the details here, but the theory, I think, is a good one in that, that idea that poor man create weak times create strong men create good times,
Yeah, good
right?
times create weak men, and then it's all goes all. Yeah.
Right. So that's another kind of version of this cyclical nature. And so we're at this fourth turning, the weak men who are literally sewing vaginas onto their foreheads. That's how, this is transgenderism. You have Olympic athletes competing in women's sports with penises, right? That's definitely weak times. It's not a time of strong masculine virility. So we're entering the bad times, and so you have the fourth turning in the cycle. And I think El Salvador is a country that's like, you could look at it as the first country out of the fourth turning, right? It's just leading the world. It's the new shining city on a hill. The new Statue of Liberty is a volcano in El Salvador. Volcano bonds became an equity offering, essentially, because when the time came to sell volcano bonds, the bond market had peaked, and we were in a bear market for bonds. So it's not a good environment to sell bonds. So instead, we created Volcano Energy, which is an equity offering, essentially. And so the country is doing energy, geothermal mining of Bitcoin, but that's a 4 to 5 year build out. So right now they're doing wind and solar
Hmm.
energy and mining Bitcoin, and they're building out the geothermal part of that equation. So that's what's happening with volcano bond / volcano energy. Then Bitcoin City, well, you got to build the roads first. So that if you look at the airport, there's a new airport, there's new infrastructure.
I've seen that. I was very impressed with the new airport, I have to
Right.
say.
So you need roads, you need infrastructure, you need water, and that's all pushing toward that area in Réunion. Well, you know, so that's, you got to build the infrastructure. So that's still there, but you got to build the infrastructure.
Despite the fact that markets are currently processing global tension, monetary swings, and policy uncertainty, the larger picture reveals a particularly resilient cryptocurrency sector. Bitcoin and Ethereum are able to weather the volatility with confidence, supported by consistent sentiment, strategic long-term positioning, and developing fundamentals. Instead of focusing on hype-driven trends, the Ethereum ecosystem is today more robust than it has ever been, with a greater emphasis on infrastructure and actual utility. The impact on the price of Bitcoin has not frightened traders or caused significant withdrawals of funds. The data paints a grounded image. This may be the quiet buildup before another explosive crypto boom. Keiser's projections may sound wild on the surface, but the data paints a grounded picture.